Hi, my name is Madison Jones, and today I'll be showing my presentation to invest or not to invest for accounting 1B honors. So I selected two defense contractors for my company. I selected Boeing and Lockheed Martin. Their ticker symbols are both NASQUAD, and how you would see them in that way is it would be NASQUAD LMT for Lockheed Martin and then NASQUAD BA for Boeing. So you guys might be wondering why I specifically chose Boeing and Lockheed Martin to conduct a financial analysis on. As for Boeing, I always just saw the commercials on the PBS Kids News channel. More specifically, I always saw the infamous Boeing 737 on the commercials. And well, I think they sponsored PBS Kids and it was a thank you segment, a thank you infomercial for Boeing. But I always saw that. And then as I grew up, I learned that they actually contribute a lot to our defense system. And I just really admire the combination of space exploration, aircraft, and defense. I think it's super cool. And on another note, Lockheed Martin really stuck out to me because they have a really big role in our national security system. And I also really think their Skunk Works division is really cool as well. You guys might be wondering what Skunk Works is. So similar to how disruptive the literal animal a skunk is, Lockheed Martin skunks work to innovate and engineer disruptive solutions in core capability areas that our nation needs in order to maintain being successful. I also recently found out from some online research that Boeing has a similar division, and they're referred to as Phantom Works. So the same disruption analogy applies. They innovate disruptive solutions to become more successful. Originally, I was researching into doing Airbus, but I came to realize that they are based in France and not in the US, so I wouldn't be able to do that. But that's okay because I'm really happy with what I learned from Lockheed Martin. So now we're going to get into about the companies, some background info. So we're going to start off with Boeing. Boeing was founded on July 15th, 1916 in Seattle, Washington by this guy, William Boeing. In 1962, Boeing went public and it was trading on the New York Stock Exchange, with the first shares selling for 8,238 of a dollar. So if you want to get into more technical terms, these shares were selling for about 82 cents a share. So it merged in 1997. It merged with McDonnell Douglas and it was the one surviving company. It recently, in the past year, more particularly May 2023, acquired the autonomous company Evtol Air Startup, which is also known as Whisk Aero. As of December 31st, 2022, Boeing has 137.1 billion in assets, 152.948 billion in liabilities, and negative $15.848 billion in equity. So Boeing has a Class A share structure, which means that only non-voting stock is available to purchase. And as of October 31st, 2023, the market capitalization is at $117.9 billion, and their shares are currently selling for $194.90. Boeing has had some financial difficulty for the past couple periods, and they have been facing various challenges over the year. For the most part, they have been experiencing a GAAP loss of $808 million from their 2022 operations. Due to this, investors might be interested in how Boeing's management is addressing the financial difficulties. Insights into the company's strategic plans, cost-cutting measures, or initiatives to improve operation efficiency could influence the investor sentiment. And I also want to make note that it's been really rough for the company since COVID. And then that was already an economic issue, but there was a 737 MAX grounding following 2 deadly crashes. Boeing has only reported GAAP net income 3 of the past 17 quarters. So over the past 4 quarters, losses have totaled to become more than $4 billion, which is quite a bit. Boeing had these losses because they were cutting corners with their new experimental safety technology. And then they covered up in order to ensure orders were not canceled, despite the protests from their engineering department. I personally, we're going to get more into this part. We're going to get back to it when we go into the financials, but it also had to do with the amount of inventory they had, which will be very clear on the financial statements. But now we're going to go in and talk about Lockheed Martin. So Lockheed Martin was founded in 1926 by this guy. And okay, so Lockheed, not Lockheed Martin. So Lockheed was first founded in 1926, and then in 1995, Lockheed merged with Martin Marietta, and together they formed Lockheed Martin. And this combination created an entity with about 23 billion in revenue, and the market cap was more than 10 billion. So they went public in 1995, and one of their recent acquisitions was purchasing Sikorsky aircraft for $9 billion. And similar to Boeing, only non-voting stock is available to purchase, and they have a Class A share structure. So what this means is that management and those types of upper class management have the voting rights for this type of stock. And their market capitalization as of October 31st, 2023 is approximately $112.6 billion, and they're selling for $451.68 a share. As of December 31st, 2022, Lockheed Martin has $52.88 billion in assets, $43.614 billion in liabilities, and $9.266 billion in equity. So this next thing is a really good thing for Lockheed Martin. They had a 15-cent increase in their dividends, but this dividend increase that has occurred recently in the past month is going to be their 25th consecutive year of having increases in dividends. And this can be a positive signal for Lockheed Martin investors who value a history of dividend growth, due to the fact that it suggests a degree of financial strength and also shows the management's confidence in the company's ability to generate sustainable profits. And it's also important to note that for the shareholders, approximately 100% of the cash flow is being returned to them through dividends and of share purchases. So now we're going to get into the financials of these companies. First, we're going to talk about Boeing. So Boeing, as you can see here, has a significant amount of debt. 37.79%, approximately 37.79% of their total assets is made up of their long-term debt. And I mean, there is a decrease from the year prior, but it's still pretty significant. The company had taken substantial debt due to various challenges that it faced, again, which included the grounding of the 737 MAX aircraft. Boeing also borrowed money to fund, So Boeing borrowed money to fund their research and development efforts. And as of December 31st, 2023's income statement for Boeing, there was negative $2.852 billion spent on research and development. In comparison to the prior 2 years, which was negative 200.2, which was negative is because it's borrowed, but it was $2.249 billion spent on research in 2021, and then in 2020, there was $2.467 billion spent. So there was a gradual decrease from 2020 to 2021, and that makes sense because we were in the middle of a global pandemic, so there might have been more restrictions with how much research could be conducted and the degree of the research that could be taking place. But we could see there was quite a bit of increases being spent on research. So this might mean that they wanted to further their knowledge about their about the issues that were taking place with their products. So Boeing's decision to maintain its free cash flow for expectations. Sorry, I heard in a investor interview, not investor interview, in an investor conference call that Boeing had a decision to maintain its free cash flow expectations in 2023, and this suggests that despite production challenges, the company believes that it can generate a certain level of positive cash flow from its operations. This may be attributed to factors such as cost-cutting measures, improved operational efficiency, or improvements in the production process. And the reason why I'm bringing this up is that it might be important for the investors to consider whether the share price decline is a short-term reaction or if it reflects broader long-term concerns. It's also important to differentiate between market volatility and fundamental issues that may impact Boeing's financial health and future prospects. So we're going to go here, and as you can see, where is it? Oh, never mind. I'm so sorry about that. I was thinking of something else, but I was looking at the balance sheets and I brought this up before, but Boeing has a much higher inventory than Lockheed Martin. Lockheed Martin is at 5.84% of their current assets being made up of inventories. Boeing has a whopping 57%. And there is an increase of their inventories that have been accumulated over time. So I think that part of the issue of their inventories is that due to the fact that the company was saddled with the excess of hundreds of jets. Now, it was said in one of the conference calls that Boeing doesn't typically hold on to inventory as planes are delivered to customers soon after completion. And I wanted to find out more about Boeing's operational stability. And I was able to find some information from the Q3 performance review, which was recently released in October of 2023, which is right here. So this is the Boeing company earnings for, this is supposed to say Q3, but in 2023, I found that Boeing's commercial airplane sector in the second quarter had a revenue of 7.9 billion. And then, oh, I'm sorry, this is they're both Q3. But in Q3 of 2023, there was an increase from 2022 to 7.9 billion. And they had a negative operating margin of 8.6%. And the operating margin, it did decrease, but there was an increase in the revenue. So Boeing also secured 398 net orders and that has a backlog of $392 billion. And they delivered 105 airplanes. By the way, I got all of this from an investor's presentation. But the investor presentation also expressed that they secured 398 net orders. They have a backlog of $392 billion, delivered 105 airplanes, and they plan to complete 737 production, transition to 38 per month by year end. And finally, they're transitioning to the 787 production to 5 per month. And if you didn't understand what I meant by 737 and 787 production, that's basically just the type of jet that they produce. So there are different airplanes, and each type of airplane basically has a different number because it's a different model. So the positive operating margin in Q3 suggests a shift towards profitability, and this is probably due to cost management measures, increased efficiency, or improved pricing strategies. So I'm going to go back to the financial side now. I just wanted to touch on the operational portion of it. And we're going to go into the Lockheed Martin balance sheet. Lockheed Martin, as of December 31st, 2022, had $3.88 billion in inventories. And they were also $15.429 billion in debt. This is much less than the $51.811 billion that Boeing has in debt. And more presumably, I firmly believe this is due to the different inventories. And this basically means that Lockheed Martin has significantly less excess inventory. And this still matters because it's excess inventory, but it's not to the degree, it's not to like as bad of a degree that Boeing has just laying around. So it's also really important to note that, where is it? Oh, here. I also really wanted to focus on the losses. If you look at Boeing's losses here, which is net loss from discontinued operations, and then their net earnings, they're significantly different of, like, let's look at here. Oh, sorry, wrong one. But the losses from operations are significantly different as well. Boeing has, just in the year alone, they had their most losses in 2020, which I think is kind of obvious because of the pandemic. They were at negative 21%. Well, sorry, 21% loss. They were at a 21.95% loss, and then it went down by a lot in 2021. But if you look at their losses and then you compare them with Boeing or Lockheed Martin's losses, Lockheed Martin has had a higher amount of losses, but a higher percentage of losses, but they don't have a higher amount of losses, if that makes sense. And we are not sure if these are from both continuing and discontinued operations. From what I see for Boeing, their operations aren't really labeled, and Lockheed Martin's are. And they barely have any losses from discontinued operations. So it could be that Boeing's excess inventory or whatever's discontinued that ended up failing, that they were engineering, could be part of their losses. And they just weren't really they haven't labeled it. So now, I'm gonna go back here. We're gonna go into the ratios that I selected. So I want to start off with saying that Boeing has a significant amount of debt, and Lockheed Martin does not have nearly a significant amount of debt that Boeing has. I mentioned this, but I really wanted to reiterate this for the purpose of the ratios that I chose. So the first ratio I chose was the debt and equity, and there are some challenges for both companies. Boeing has had a historically carried substantial amount of long-term debt, which can result in a higher debt to equity ratio. And they have had quite a bit of operational challenges with the 737 MAX. And the aerospace industry is capital intensive. So companies often require significant investment in research, development, manufacturing. Balancing these capital requirements with debt levels can be challenging, and this is particularly during economic downturns or disruptions in the aviation industry. I'm going to touch back on the operational challenges with the 737 MAX, but this led to production delays and disruptions in their supply chain. And these challenges can impact their cash flow, and they may require the company to make strategic decisions about capital structure and their debt management. Lockheed Martin's revenue is significantly influenced by their government contracts, on the other hand, and defense budgets can be subject to political and economic uncertainties. So changes in government spending might also impact the company's ability to generate consistent cash flow, and it also affects its ability to service debt. It's also important to really note that Lockheed Martin operates in global geopolitical conditions, and the landscapes where they operate are where international tensions and conflicts can impact defense spending. So I listened recently to a Lockheed Martin investor conference call, and it was noted that they were selling jets to South Korea, Israel, and with the tensions that are taking place in both areas, this is just one of the prime examples that I wanted to show to support the challenges that they might have with the global geopolitical conditions. So it's also like overall for this explanation slide, it's really important to note that Lockheed Martin and Boeing might face challenges that are related to their interest rate sensitivity. If interest rates rise, then the cost of servicing debt may also increase, and this impacts their profitability and also their cash flow. So here's the actual ratio. Boeing's long-term debt is, again, quite high, 37.79% of total assets, which is $51.811 billion divided by $137.1 billion. So that's how you get the percentage. Lockheed Martin's debt is approximately 29.18% of total assets. Therefore, I thought that the debt to equity ratio would be good to explore to see if both companies have the ability to raise cash from new debt. So the stockholders' equity for Boeing in 2021 was at negative $14.846 billion. And that was 10.72% of total assets. In 2022, it slightly increased to 11.56% of total assets. And in dollars, that would be $15.848 billion. I divided the long-term debt by the total stockholders' equity in order to get the ratio. And the ratios ended up being negative 3.27 and then negative 3.83 for Boeing. Negative ratios suggest that the stockholders' equity is negative, which could be a result of the substantial accumulated losses or accounting adjustments. For Lockheed Martin, the debt to equity ratio was 1.67 in 2022, and in 2021, the ratio was at 1.07. Again, the long-term debt for Lockheed Martin was $15.429 billion. And then in 2021, it was at $11.67 billion. The total stockholders' equity was at $9.266 billion. And in 2021, it was at $10.959 billion. I divided the numbers to get the ratio. And I apologize for the background noise. I'm currently at the SAC. Oh, I accidentally switched the slides, but the ratio is overall positive and it aligns with conventional expectations. Based on these results, Lockheed Martin appears to have a more conventional and positive debt to equity ratio than Boeing. And Lockheed Martin's positive ratio indicates a moderate level of leverage, which is common in certain industries. And this is especially really common in the aerospace and defense sector, as again, both of these companies are defense contractors. So the second ratio I chose was the current ratio. And some background info is if a current ratio is higher than 1, then that indicates that a company has more current assets than current liabilities. And this suggests that there is potential to cover the short-term obligations. A current ratio that's lower than 1 often indicates that a company might face challenges with meeting its short-term obligations with its current assets alone. So, oh, you can't see the PA. But Boeing's long-term debt is approximately 37.79% of total assets. And, oh, sorry, I said that. But this also has to do with their debt. I wanted to see if they would have, if each company would have a harder or easier time to meet their financial obligations. And that's another word for debt. So yeah, they're both synonymous to each other. For Boeing, the current liabilities were at $90.52 billion. Their current assets were at $109.523 billion. In 2021, the current assets were $108.666, oh, double numbers, $billion, and the current liabilities were at $81.992 billion. I divided the current assets by the current liabilities in order to get this ratio. And the ratios themselves were at 1.32 in 2022, and then at 1.33 in 2021. So the current ratio has decreased quite a bit. As for Lockheed Martin, their current assets in 2021 were at $19.815 billion. In 2022, their current assets were at $20.991 billion, and their current liabilities were at $13,997 billion, and in 2022, the current liabilities went up to $15.887 billion. So for Lockheed Martin, there has been an increase in both assets, current assets and current liabilities. And the same goes for Boeing over the period of a year. And the current ratio for Lockheed Martin was at 1.42 in 2021, and there was a drastic decrease, in 2022 to 1.32. So for Boeing, while their change is relatively small, it can indicate that there's a slight reduction in Boeing's ability to cover their short-term debt with their current assets. Lockheed Martin's ratio decrease represents a more significant decline, as I previously pointed out. And this signals a reduction in the company's short-term liquidity position. So in terms of the current ratio alone, a higher ratio is often considered better, as it indicates a stronger ability to cover short-term obligations with current assets. Based on the results, Boeing has a slightly better current ratio in 2022, as it remains stable. So although both ratios are the same for 2022, Boeing's was able to remain stable, while Lockheed Martin's ratio is a result of a drastic decline. So I would say that Boeing therefore would have the better ratio, as it was due to stability. So I also wanted to point this out because they're related to each other topic-wise, but when taking into consideration the strong liquidity and cash debt balances, which I am showing right now, it is very probable that a slight decrease in market and in cash and marketable securities might not necessarily indicate a significant shift in focus towards debt repayment. The constant consolidated debt level suggests that Boeing has maintained its debt position, which is true. It's historical. You can view financial statements from 10 years ago, and the debt has remained very stable. And furthermore, I have learned from a Boeing conference call that they're going to focus more on repaying back the debt, which is where operating cash flow was also mentioned. So a positive operating cash flow might indicate a healthy cash generation capacity, which could be used for various purposes, including the debt repayment. So I thought that was just interesting to bring up. And now we're going to get into the net book value as adjusted. So an issue I had when finding the net book value was that each company does not have an operating lease, and they didn't even have the other option that is synonymous to the operating lease assets. Personally, I think it's because they're designing all of these, they're defense contractors, and they're designing all of these things to defend our country. I don't think if you're going to blow things up, that doing it in a place that you would rent would be the best option. I think that's why they most likely own all of their land. So I think that's why it doesn't exist. But basically what I did was I took the total assets and then I subtracted the intangible assets and then goodwill, and then I got my assets as adjusted. And then I also had the liabilities, and I don't have an operating lease, so I just stuck with the liabilities. So I subtracted $2.311 billion from my $137.1 billion. And then I also subtracted the $8.57 billion, and I got for my adjusted assets $10.368 billion. And then I also subtracted the $152.948 billion that I have in liabilities. And my net book value as adjusted is at negative $26.216 billion. For Lockheed Martin, the same thing applies. I don't have operating lease assets. I don't have operating lease liabilities. So I couldn't include it because it doesn't exist for my company. But from the $528.8 billion I have in total assets, I subtracted the $2.459 billion I have in intangible assets, as well as the $10.780 I have in goodwill, and I got for my adjusted assets $13.239 billion. And I also subtracted the liabilities I have, which is $43.614 billion. So after the adjustments are made, I get negative 26.216 billion for Boeing, and I have 471.947 billion for Lockheed Martin. I have taken notice that the aerospace industry is cyclical, which means that while there are strong periods of demand, there are also strong periods of downturn. So during industry downturn, these companies can experience write-downs on their assets, which can also impact the book value. As a result, this type of cycle can influence the market to book ratio. So a higher market to book ratio can indicate that investors are willing to pay a premium for the company's assets and growth prospects, while a lower ratio can indicate concerns or uncertainty in the market. So we can see here clearly that Lockheed Martin is in the hundreds of thousands and millions at 471.947 billion, and Boeing is at negative. So it's clear that there could be some concern for Boeing, and as for Lockheed Martin, investors are going to be willing to pay a premium for their shares, which, yeah, it's expressed by the difference. And Lockheed Martin, again, is more valued than Boeing, seemingly. Now we're going, oh, sorry, I'm so sorry. Now we're going to get into the market to book ratio. So I divided the market capitalization by the book value per Investopedia. So that was $110.32 billion divided by negative $26.216 billion. And I got about negative 4.2 billion. About negative 4.21 billion. Sorry, not billion. I got about negative 4.21 for Boeing, and then for Lockheed Martin, I got 0.2. So, while both companies are below 1, Lockheed Martin has a greater book value, market to book ratio than Boeing. And in conclusion, we're concluding now, but in conclusion, Boeing seems to be losing more money each year, and as a result, Boeing currently has a lot of issues, which is the 737 production issues, the 777X delays, the 787 issues earlier this year. And on the other hand, they are just seeing strong demand and are increasing production and deliveries. People can't just switch to Airbus like overnight, since their order books are full for years to come as well, and they're struggling with increasing production numbers. So I guess the main question that one should ask is whether Boeing will eventually resolve all of their issues that they are currently fighting with, or will they just keep facing more and more of them? Boeing has not had a profit in about 5 years, and they have been not generally generating free positive cash flow, and they have more debt than assets. So as poorly managed as it is, however, I don't think at all that Boeing is going to go anywhere sometime in the foreseeable future, because our military needs them and they're a defense contractor. They're kind of an irreplaceable player in a giant global industry, more specifically in the private sector side of their business. So yeah, Boeing has a lower market to book ratio. They have also had their accidents a few years prior, which I think might have contributed to their decline. Lockheed Martin, on the other hand, has had a track record of consistent profitability and revenue growth. Their cooperation offers a wide range of goods and services, as does Boeing, and this variety can lessen the risk brought off by shifts in particular market niches. Oh. So as an investor, if I had to pick between the two companies, I would invest in Lockheed Martin just because they have a track record of different things. They have less long-term debt. They have increases in their dividends. And I think that is something that investors should be looking for. I also want to bring up that I heard that, not that I heard, I know, but 30 years ago, people were saying the same things about Apple that Boeing people were saying, and now Apple is worth a lot more. So that's also, I guess, another argument, but that's all I have for you guys today. Thank you so much for watching, and yeah, bye.